Hello and welcome back to the Deep Dive. We're here to really cut through the noise for you.
Get to the heart of it.
Exactly.
Yeah.
Today, we're plunging into Bitcoin, specifically its current status, its pulse, and maybe what the near future looks like. This is as of July 1st, 2025.
And we've got a stack of reports here covering the last, 30 days.
That's right. On-chain data, social media buzz, expert projections, the works. Our mission is to pull out the key nuggets for you.
Yeah, find those insights.
So the big question, I think, is, are we actually heading into a new bull cycle? Or is this, quiet period something else entirely?
And it's so important to remember, right? Understanding Bitcoin isn't just staring at price charts all day.
Oh, definitely not.
It's about connecting the dots, different data points painting that bigger picture. And for this dive, we're using solid sources. Think Glassnode, CryptoQuant, CoinWars.
And X for the sentiment piece.
Exactly. Reliable stuff.
Okay, let's start at the foundation then. The blockchain itself. What's the network activity telling us?
Where do we begin?
Let's unpack this. Daily transactions. That's usually a good starting point. Reports show, over the last month, maybe 320,000 to 500,000 transactions a day.
Which sounds like a lot, but context matters.
Right. Because that's actually a pretty big drop compared to the peak in, what was it, 2023, 2024.
Yeah.
We saw like 734,000 transactions per day back then.
It's a significant drop.
Yeah. So what does that drop really suggest? Fewer speculators, maybe? Fewer new people jumping in? What's the read-through?
Well, yeah, that's one way to look at it. Less speculative froth, maybe. But here's where it gets kind of interesting. There's a contrast.
Okay.
While those daily numbers are down, the whales, the big holders, they're showing really strong signals. Addresses with 1,000 or more Bitcoin, they've kept accumulating.
Accumulating. Even now.
Yep. They now hold, get this, 16.57 million BTC collectively. That's up 1.1 million BTC over just the last year.
Wow.
And if you link that to the long-term holders, or LTH's folks holding for 155 days or more, they control about 15.93 million BTC. That's like 80% of the entire circulating supply.
80.
Roughly, yeah. This concentration in what we call strong hands, it's often seen as a really positive signal. Suggests conviction, often precedes a bull market, actually. Squeezes the available supply.
That's a critical distinction, isn't it? The difference between like the daily noise and that long-term conviction. You got to look past the surface.
Absolutely.
So speaking of those strong hands,
Yeah.
What about Bitcoin moving off exchanges? We hear about that a lot.
Ah, yes. Exchange flows. Very important.
The data shows an outflow of 85,000 BTC from exchanges just in the last 30 days. Exchange reserves are down to 2.46 million BTC. That's a multi-year low, right?
It is a significant low.
But what does that outflow tell us? Less selling pressure?
That's the main takeaway, yeah. Less Bitcoin immediately available to be sold. It reduces that potential selling pressure, and it reinforces that long-term holding trend we were just talking about.
A supply shock in the making, maybe.
Could be. And add this detail. 89% of the transaction volume. We're talking transfers over $100,000.
Okay, so not small retail moves.
Exactly. This suggests the big players, the sophisticated money, they're moving assets off trading platforms, probably into cold storage. Suggests they aren't planning to sell anytime soon.
Okay, but here's where it gets maybe a bit confusing. The mining data seems almost counterintuitive.
Ah, the miners. Yeah, that's a complex piece right now.
Reports show mining difficulty actually decreased by almost 8% in the last month. And the hash rate, well, it plummeted from over 1,200 exahashes per second on June 30th down to under 800 on July 1st.
Yeah, 1,222 EHs down to 795.48 EHs.
In one day. That sounds dramatic.
It is dramatic. That kind of single-day drop outside of something huge like the China mining ban is almost unprecedented. It points to a really abrupt, large-scale shutdown of mining power.
Why, though? What's driving that?
It suggests miners are really feeling the squeeze, reducing operations, maybe even leaving the network entirely. Could be rising energy costs, could be older machines just aren't profitable anymore.
Profitability pressure.
Definitely. And their fee revenue is also pretty low, about $558,000 a day. So they're really relying on those block rewards.
Okay, so if we put all this on-chain stuff together, whale buying, coins leaving exchanges, but miners struggling. What's the overall picture?
Well, it points towards a major capital shift, moving from, let's call them weak hands, short-term speculators, towards the strong hands, the long-term holders.
Right.
And historically, that kind of shift, that cleansing of the network, is often a sign of market stabilization. It can be a precursor, setting the stage for a potential bull market.
Interesting. Okay, so that's the blockchain data. But Bitcoin's also driven by people, by sentiment.
The human element. Always crucial.
So how are people feeling? What's the chatter online, say on X? Reports seem kind of mixed.
Yeah, it's definitely a mixed bag right now. Some data suggests sentiment is pretty low, maybe the lowest in months.
Last 2 months, okay.
But then other indicators point to maybe increasing retail interest and positive comments slightly outweighing negative ones.
So how do we square that? If sentiment is supposedly low in some places, and Google searches are flat, still way below the 2021 peaks,
Right. Searches are flat.
are those positive comments maybe just an echo chamber? Is broader interest actually cooling off?
That's a really good question. How do we interpret this? I think the key nugget here might be the lack of extremes, meaning we're not seeing wild euphoria, but we're also not seeing deep despair across the board, especially in things like Google Trends. It feels more like consolidation, psychological consolidation.
Quiet reevaluation.
Sort of, yeah, which often happens before bigger moves. It's not burdened by that irrational exuberance we sometimes see. The fear and greed index, for instance, it's been hovering around 50. That's neutral.
But touched extreme fear sometimes too.
It did dip into extreme fear at points, yes. And looking at X specifically, about 22.8% positive comments versus 17.3% negative. So a slight positive lean, but definitely caution mixed in. That flat Google trend line reinforces that lack of broad public frenzy right now.
Okay, caution makes sense. Yet, didn't the sources also mention, like, 231 new wallets popping up with 10 or more Bitcoin? Yeah. That sounds like accumulation continuing.
It does. That's often interpreted as larger investors still quietly building positions.
So how are the crypto influencers reading these mixed signals?
Yeah.
What's the narrative they're pushing?
Well, many of the big voices do point to that accumulation, the whale activity, as a clear bull signal. They argue, smart money buys when sentiment is low or uncertain.
By the fear, right?
That's the mantra for some. But then others are actually highlighting that low sentiment itself, saying this is the perfect time for the market to build a solid base before the next leg up.
Makes sense. What topics are dominating the conversation online?
The usual suspects, plus a new one. Still lots of talk about Bitcoin ETFs, their impact, the post-halving effects, how that supply crunch plays out over time. And interestingly, there's this growing buzz around AI coins.
The AI coins. Okay, something new drawing attention.
Yeah, pulling some focus and maybe some capital, too.
All right, so we've looked under the hood at the blockchain. We've taken the temperature with social sentiment. Let's try and bring it all together. What does it all mean?
Synthesizing time.
Yeah. Are we closer to answering that initial question? Bull cycle or something else? The sources seem pretty clear. Bitcoin's in consolidation phase right now.
Agreed. That seems to be the consensus.
And like we discussed, the drop in network activity, that dramatic mining adjustment, it points to less speculative froth. But crucially, that's balanced by strong accumulation from LTHs and coins continuing to leave exchanges.
Exactly right. And that consolidation pattern, capital moving from those weaker short-term hands to the stronger long-term ones, it's classic. We've seen this pattern play out before major uptrends.
A strengthening foundation, shaking out the tours.
Pretty much. It leaves the market in the hands of those with more conviction, a longer-term view.
Okay, so given that foundation, what's the short-term outlook, say the next 2 to 4 weeks? What can you reasonably expect?
Well, the consensus from the sources suggests more sideways trading for the immediate future, probably bouncing around in the, say, $95,000 to $205,000 range.
Okay, range-bound market.
Most likely. We can break it down into scenarios. There's a bull scenario, maybe a 40% chance. That would mean looking out a bit further, yeah. The accumulation by the long-term holders, the coins leaving exchanges, that could really start to build significant upward price pressure.
Supply getting squeezed harder.
Potentially, yeah. Add in the ongoing effects of the halving, remember, that cuts new supply and maybe more positive ETF developments, and that these could seriously boost demand.
So what kind of price levels are we talking, potentially?
The sources are suggesting a possible range of $120,000 up to maybe $150,000 in that 3-6 month time frame.
120K to 150K. Okay, that's significant.
It is. But, and this is important, there are caveats. Macroeconomic factors, interest rates, global economy stuff, those are still big question marks. They remain significant risks for any asset, including Bitcoin.
Always the bigger picture to consider. What about strategies? What are the sources recommending?
Kind of a few approaches. First, there's HODL, the classic hold on for dear life, basically reaffirming Bitcoin as a long-term store of value. Stick with it.
Conviction play.
Exactly. Then there's partial profit taking. May be advised if the price pops above $105,000 for those wanting to take a bit of risk off the table.
De-risking. Makes sense.
And finally, waiting. Holding off, perhaps waiting for a potential dip below $90,000 as a chance to buy in or add more, a strategic buying opportunity. But in every case, the emphasis is really on risk management. Know your plan.
Good advice. Okay, that brings our deep dive pretty much to a close for today. If we had to summarize the key takeaway for you, our listener.
The bottom line.
Yeah. Bitcoin seems to be in this consolidation phase, right? Short term might look kind of flat, maybe choppy, but underneath all that, there are these strong positive signals building, especially from the long-term holders.
Yeah, the market seems to be retooling itself, getting ready for what looks like, according to this analysis, a potentially pretty bullish medium-term outlook.
So patience might be key in the short term.
It seems so. Investors should probably keep that long-term perspective, keep watching how things develop, and maybe a final thought for you to chew on.
Go for it.
We talked a lot about this shift, Bitcoin moving from weak hands to strong hands. Based on everything we've discussed, maybe ask yourself, what kind of hands do you want to have in the long run?
Good question.
Because this whole thing, it isn't just about price wiggles, it's about the psychology, right? Market endurance, conviction. But as always, please remember, none of this is financial advice. Always chat with a professional advisor before making investment decisions.